As we are covering the GIA Promoters Forum 2024, we thought it's best to get in the founder of the forum, Rakesh Arora, founder of Go India Advisors, of course, or Go India Stocks, and Manan Shah, MD of MICL Group, to discuss about the interest around real estate and what is the kind of execution outlay and the kind of numbers that the companies can clock in after clocking in very heady numbers over the last 2 or 3 years. Gentlemen, thanks so much for joining in. And Rakesh, a bit about the conference, of course, but also the real estate flavor, because I see there is prominent real estate interest in your forum or conference around this sector.
So, Nitish, thank you for inviting us on this show. So we have around 21 promoters who are participating at this forum. And just to give you a comparison, last year we had like 160 participants. This year it is 550. So that is the kind of change in sentiment towards the market. Obviously, there's a lot of wealth effect, and a lot of reforms have happened in the real estate sector. That real estate sector, after being in kind of a consolidation mode for 10 years, is now actually coming up in a big way. Fortunately, the affordability still remains extremely high, and that's why most of the companies are more to launch new products. The last 2 years, despite the healthy demand that we have seen, inventories have actually gone down. So there is need for new supply to come in, and I think Manan will tell further on this. But real estate sector is definitely looking really good, and with interest rate cut possibly in offering later in the year, maybe things will look even better.
Okay, Manan, fill us in on this. You guys have traveled some distance in terms of execution over the last 24 to 36 months. Where does Man Infra go from here?
So basically, the Mumbai journey has been really good for us. So we've procured a lot more projects. We've got more than 6 million square feet of a pipeline coming up, and we've been focusing on the ultra luxury sector in the past 1 year. So we've procured a lot of projects in and around the city, naming from BKC, Pali Hill, Tardev, Marine Lines, Juhu. We are about to complete one more project, and we are also coming up at Ville Parle. So the company's journey towards the ultra luxury portfolio is growing very strong. We've just launched another larger project at Ghatkopar East, where we've already sold more than 300 crores of stock. Also, overall, there's a very positive environment for the company, where the customers have been flowing in, the bookings have been constantly happening, and we see this momentum continuing because there's a positive approach towards real estate after a long time, and people have been appreciating the quality standard products that we've been doing. So yeah, things looks good.
Manan, do you reckon that there is enough appetite for the quantum of construction that is happening? Let's say in your case, you can talk about MMR. We'll ask the same question to Rakesh, of course, for Pan India as well. But for MMR and other areas that you might be present in, part one of my question is that actually. Let's first focus on that. Then we'll come to the other aspects.
So I would say people have actually got a very brand conscious now, where people have been wanting to buy something which suits their lifestyle, suits their needs, and people are wanting to buy apartments which they actually wanted long back. So now people have been wanting to shell out slightly more out of their pocket as well, where they're going and opting for larger spaces, because post-COVID, there's a lot of mentality and thought process which has changed, which is in a positive side, where people are looking at not just real estate as a potential investment, but it's also an essential. And people have realized that owning a space in any of these tough times, if you had a home, it's never been a problematic situation for those then compared to the basic rental people. So we've always been getting these testimonials from customers, in fact, that they were really appreciate branded construction developers, which, for example, like us, where we've been delivering projects before time. So I feel for people who've been delivering, for people who've been doing their work constantly with some good quality job, there would definitely be an appetite for those.
Manan, one question to you and then to Rakesh. Rakesh, I'll of course ask him about the multiple companies out there too, but to you. Now, because there is no other way to figure out except for pre-sales or reported sales, Manan, I'm not asking you for the next 12 months. I'm asking you from where you are right now, either in terms of a metric of area under development sold, or actually in terms of revenues, because in your case, you straddle from mid-income housing to premium as well. So maybe square footage might not do justice. Where is it that you will be 3 years out from where you are right now?
See, we've already secured a pipeline which is more than 15,000 crore as of now in our portfolio. And definitely we're looking out for more and more projects because we've been delivering projects every year. So 3 years from now, I see a comfortable pipeline of more than 25,000 crores in our portfolio coming up. And of course, a lot of it would be ongoing right now as well, which is a large scale project, so that we would be executing in the next 5 to 6 years of time. And even as of now, if I say for this current year also, the targeted sales is nearly 4,000 crores. So if you compare it to the last year, that's nearly the 4x of the number that we've targeted this year, and which we've already secured in terms of getting the project. Now the launches are due in the next upcoming quarters. By March, we would be launching nearly around 5 to 6 new projects out of our portfolio. So yes, the next 3 years down the line, I think 25,000 crore would be a comfortable number to state.
So that's the story as far as One Infra is concerned. But good morning, gentlemen. Tamanna here as well. Rakesh, since you have the sort of visibility on the space, and especially some of the smaller players through your conference as well, I'm trying to get a sense that for buyers who moved towards branded larger players post-COVID, is that tide turning? And the focus may be on quality projects, but is it also on the bigger brand names?
That is true. The demand for luxury and ultra luxury has been outpacing, the other categories in a big way. And this is a phenomena which is seen not just in Mumbai, but also in the other regions. So I think, that is the segment which is likely to do very well. Obviously, there is affordable housing, which is now getting a big push from the new government. And so hopefully that segment will also start to kick in. But, the preference is definitely for larger size project with a lot of lifestyle amenities because work from home is getting a little bit ingrained and people need larger spaces and they want, more out of their houses. So I think this trend is a longer term trend. It's not really a fad. It's not going away anytime soon.
But what about the concentration? Is it still continuing in MMR, NCR? Are you seeing that? Because, that's the problem largely with Indian real estate, right? The growth is coming only from the top 8 markets. Are you seeing that expanding when you're talking to people there? Are they seeing it expanding?
So, see, this big shift is happening across various businesses where things are moving from unorganized to organized sector. And this is more evident in larger metros because you have big players like, Man Infra, etc. And which is visible. In smaller cities also this change is going to pick up, and we are seeing a lot of larger players now saying that they have some plans for tier 2 and tier 3 cities. So you will see this trend penetrating into the, across India. So metros is just a start. I think there's a whole country to be, catered to later on.
Interested to know your view on that, Manan, as well, because you do work on both ends of the spectrum. Do you think that the time of affordable housing is also coming, or is all about luxury, ultra luxury that continues as far as the business perspective goes?
See, for the past 2 years, I see the HNI people have made much better revenues in terms of everybody's business have been growing. So yes, definitely the ultra luxury is picked up, but to follow affordable housing is also a very key element, which is part of our portfolio as well. I see a lot of the salaried people which have been making much better bonuses also in the past 2 years. I've seen that sector also picking up well, and eventually affordable housing is kind of the backbone also for our country, because the majority population comes in from that side, which contributes to the real estate sector. So it has to pick up, because both the ends, the ultra luxury would not just only sustain in the industry. We will have to match both, and I'm seeing people buying. I'll give you an example of our Mira Bhayandar project, like last year we had launched that particular project. We've sold nearly around 300 plus of units in that as well, and this year we've targeted another 200 units in that particular project, and things have been moving very smoothly. We are still seeing continuous movement at that particular project as well. So I do see affordable housing also picking up. Yes, the pace is slightly slower compared to the ultra luxury.
Okay. Rakesh, one final question to you. And like I started off asking, that you've multiple, the flavor of real estate is evident in your forum this year. Now, you obviously can't talk about Manan Infra. He's sitting with you. But just tell us about the kind of growth that you expect, maybe even Manan or maybe some of the companies to clock in over 5 years. You are exempted from talking about Manan because Manan is sitting right next to you.
No, obviously, so Manan Infra is a very, excellent business model, asset light, high ROE, and, it's a cash-rich company. The other business models that we are seeing within our clients are, companies with large land banks, fully paid up, and now in monetization stage. They are monetizing it through various measures, like one of our company, Anantraj, is doing data centers from its commercial space. We have got a Ganesh Housing, which is doing both an SEZ, which is a combination of residential and commercial. So those companies are also benefiting, because the land bank value has gone up so much, and they have already paid for it. It's in the price. So real estate, I think, is in good times, and as I was mentioning, that it's a slightly longer term trend, because real estate cycle normally lasts at least a decade. So, I won't be surprised that, next 5-6 years we have a, continuing boom.
This last point, Manan, I just want to follow up from the point you made about affordable housing. Do you see it having a larger share in sales going forward? Do you see it inching up, or will the push still be towards luxury for you?
See, I believe every person would eventually want to have a luxury house, right? So the sentiments have always moved from affordable towards luxury, and especially post 2020, the trend we have seen, like the sizes of the houses of an average 2 BHK, if you see in Mumbai, were at 500 to 600 square feet. Now people are wanting to opt for 800 square feet and all. So I feel affordable sector is really very dynamic, I would say. It keeps on fluctuating and changing depending on the economics, how the country is performed. So I would say it would be slightly more volatile and more flexible. But yes, everybody would always aspire to own a luxury home. So the sentiments will move towards the larger houses for sure.
Yeah. Everyone will aspire to own a luxury home. Whether they can or not is always the question. But great speaking with both of you today. Good luck with the rest of the conference.